Good morning, guys. We're back at the morning market mixer. TradeThirsty's morning market mixer. It is live Monday to Thursday for the whole of March as part of the March Madness event with TradeThirsty. So for you guys that don't know me yet, hopefully you've been coming, but if you don't know me yet, my name is Russell Barbour, and I started trading about 12 years ago. I was living in Seattle, had a lot of student loan debt, and decided to start trading as a way to make extra money on the side. But like a lot of people, I ended up losing quite a bit of money, about $20,000 pretty quickly by chasing the market. And that led to many years of overtrading, oversizing, trying to be right all the time, and figuring out that this wasn't always the key to success. The turning point came for me when I found a mentor and started to learn how to trade just SPY using very mechanical rules very consistently. And strangely enough, actually trading 0 DTE only, which is very high risk, high reward. But I found that it's a very profitable way to trade if you do it the right way. So actually focus on just one high quality setup per day with very well defined entries, exits, and very strict risk management as well. So let's talk a little bit about what's going to happen in this session. First of all, I use a bunch of resources and tools. The first one being TradingView, which is one of the most popular platforms out there for charting. I use Earnings Hub for earnings and news, so we'll be looking at that too. SPY levels are a combination of barchart.com and also some proprietary indicator levels that I use as well. We do have a cheat sheet for today's strategy, the 0 DTE strategy today. I'm going to share that with you now and then go through it with you. So if you want to scan the barcode on the screen right here, you'll get access to the cheat sheet. And I'll also post the URL tradethirsty.com/MMM into the chat for you guys as well. So I'm just posting it now. Yeah. Okay. So let's go and have a look at the cheat sheet. We go through this every morning, but it's worth revisiting today. Switch it to here. All right. So in this cheat sheet, I basically go over what 0 DTE trading is very briefly, and then talk about my strategy a little bit. The good thing about this strategy is that it works in markets that go up and markets that go down. So it's a very, very versatile strategy. 0 DTE stands for 0 days to expiration. If you don't know that already, it's contracts that expire the same day that they're traded, and you can capitalize on the short-term price movements within a single trading session. So we're looking at strictly intraday moves here, typically about 10 or 20 minutes in the trade. And that's really important because we have theta decay, which takes away from the premium of these 0 DTE contracts. They really lose value rapidly as time passes. So when these positions are opened, we want to be out within minutes usually. Otherwise, theta decay takes away a lot of the premium. And it's very hard to make money if you're holding these things for more than a few minutes to an hour. So yeah, so that's what 0 DTE is. We trade them on SPY. Liquidity is extremely important on SPY. It really helps with the execution of our 0 DTE trades. You can do it on the Qs, mainly major indices like the SPY, which is what I use. Risk management is essential. You want to use smaller position sizes. You don't want to trade more than you can lose. It's very important with 0 DTE trading. So the potential benefits, you can use much lower upfront capital. You've got high leverage, fast moving contracts, which can be really fun or really terrifying, depending on which way it moves. You have very risk limited defined risk compared to the premium you paid. And there's often daily opportunities present themselves in 0 DTE trading. The downside is that we have rapid time decay with theta. And the downside is also that you have large price swings and fast losses. So that can be pretty scary, and there's a lot of emotional decision making under pressure, and these choppy markets that we see sometimes can really erode the option value pretty quickly. So here's the very basics of the strategy that we're going to be looking at today after we go through some market news. Basically, I start preparing at 10 a.m. Eastern time, actually a little bit before that. I look at things like VWAP, key support and resistance, what any news is that might change the market in either up or down. Look at the opening range breakout. So you're going to see that on my charts in a little bit here. Basically draw lines at the highs and lows of the 30-minute chart. And I try to avoid predicting direction too early. So if we have a tight range, which we'll look at today, I think we do actually have a tight range, that suggests a possible trend day. And again, this strategy actually works really well in whether the market's going up or whether the market's going down. We also look at VWAP and also candle stacking as well. So anyway, that's the cheat sheet. Make sure you pick that up if you haven't got it already. And let's keep going today. So let's go back to the slides here. So quick overview of SPY. For you guys that don't trade SPY much, you might not have really thought about it too much. It's obviously an ETF, or exchange traded fund. It tracks 500 stocks with the S&P 500, which is really nice because it means you don't have to do a lot of scanning or anything like that. You're not exposed to any sort of local news for particular tickers. So it's basically the market as a whole, which is really nice. It was the first US ETF ever listed back in 1993, and it's #1 for liquidity. So it's an ideal ticker for 0DTE trading. It also has 0DTE contracts every single day. So that's really useful as well if you want to trade every day. So here's a little overview of today's agenda. I'm going to go over the SPY ATM alert from yesterday. Yep, it was yesterday. And that's basically a service that I run which alerts at 10:30 a.m. Eastern time on 0DTE contracts on SPY. So we're going to talk a little bit about that, how that went. We're going to talk about the overnight market news and any earnings and data that we have to look out for today. We're going to look at the market direction from a technical point of view, looking at the opening range and VWAP. We're going to look at key intraday levels on SPY, look at volatility, see how that's doing, look for any max intraday moves, and then look for any trade opportunities. So far, we've only had one trade opportunity in this time frame since we started this series, but you never know what will happen today, so we'll have a look and see. All right, so like I said, the SPY ATM is a single trade every morning at 10:30 a.m. Eastern time. This was yesterday's 0DTE trade. It was a put alert on SPY, so you can see the information that you get given. It's very simple. It's printed into a Discord channel. And SPY basically was at 664, and the alert was the 665 puts at 276 entry with a take profit of 331. Unfortunately, yesterday was another loss. We've got about a 75% win rate on this, but losing trades are just part of the game. So yesterday, of course, we had this very nice bullish day, nice recovery and gap fill. And so this actually ended up going against our put alert quite significantly, and we got stopped out pretty quickly. But the nice thing is we have very well-defined entry, exits, and take profits. The stop loss is very well defined. We actually enter an OCO order to make sure that there's no emotion comes into this. So no stop outs take out half your account or anything like that, or half your position. These are very well defined trades. So losses are very, very manageable. So it's just what happened yesterday, unfortunately, on this alert. So let's go through some overnight news. So there's not a lot to talk about today. Basically yesterday, we had oil prices start to slide. I believe oil hit 85 last night, early on after the market closed. And basically what happened yesterday, and we'll look at the chart in just a minute, was the market was heavily shorted, and they got short squeezed pretty hard to the upside, which really caused some big swings in the 0DTE contracts. And so oil prices are sliding again today, looking to see if the markets will rally more based on the oil prices. So really oil, and again, the Iran conflict is driving a lot of the market news today. So there's really no clear peace deal or end of the war looking very likely. It's not 100%. So it's still kind of like rumors. Nobody's really sure. So that's still causing some fear in the markets. There aren't any major economic events today, so that's nice. So we don't have to worry about being in position when we have some major economic event, some Fed speech. We are slightly bullish pre-market, very slightly. It was almost flat when we opened. And so the war headlines is driving the market, and any oil stabilizing of the oil prices will also affect the markets as well here. So the big risk is if we get a huge oil spike, if something comes out of the Iran conflict and we get this geopolitical escalation, then we'll see the market sell off again. So that's kind of the biggest risk. Now, when I say risk, like we can play to the downside, so it's not the end of the world if the market starts to sell off. The ARB strategy that I use works well either way, either direction. So we're still in a high volatility environment. This can be good for SPY intraday trades. So it's not necessarily a bad thing with the market being the way it is. There's no major earnings today. I looked at Earnings Hub yesterday and then this morning, and there really isn't anything to talk about when it comes to earnings today. So an overview of SPY, what's going on? We'll look at the chart in just a sec, but here's a basic summary. We're still below the 50 SMA and the 100 SMA. We are back to old support here at 677.45, and the VIX has cooled down a little bit. So let's switch to the charts and start looking at what's going on today. So hopefully you guys can see my daily chart on SPY here. So you can see we have this support around 675, 676 area from this candle back in January, this candle here, this candle here, and then some little bit around the 100 SMA here as well. So you can see that we are still below after we had a strong bullish day yesterday, which almost hit the 200 SMA. We weren't far off. We had a strong bullish day, but we still didn't make it above the 100 SMA or up to the 50, which would be signifying a bit of a trend reversal. So you can see today in this candle, we're already starting to see a bit of a reversal again and a sell-off as we're talking right here. So we're still looking a little bit bearish, and we'll look at this in a little bit more detail on the lower time frames in just a second here. So overall, still kind of bearish. You can see we're in a downtrend. It's a choppy downtrend, partly because everything's driven by the news. So if there's news that comes out, we get massive moves. But we are in a downtrend overall since about the 25th of February. We've been in a very rough looking downtrend in the markets. VIX, like I mentioned, is down at 25, which sounds low, but it's actually pretty high. But compared to where we were yesterday at 35, like that's a nice move down. And like I mentioned yesterday, VIX does this all the time. Like it's known for these volatility spikes, but this is the highest it's been for a long time. Think about a year. So we had this really big spike yesterday, but we're much more stable today. But we're still in an situation, so it's definitely still volatile, and the premiums and the options contracts are reflecting that. All right, let's drop down to the 30-minute chart here and start looking at. All right, just going to get rid of the SMAs here and put VWAP on. So we're below VWAP, not surprising. We're actually just breaking out of the ARB here, which is a little frustrating for a trade during this session. You can see our 30-minute candle was marked up. It's a little bit off here. You move down. The bottom of the wick. So I'm marking the bottom of the wick here. So this top line, actually put the numbers in for you guys. So I'll just switch to the next slide. So here are the numbers for the expected move for the day based on the at the money straddle. Here's the opening range, 678.95 to 675.92. We're below VWAP with a VIX of 24. So let's go back to the chart again here. So interestingly enough here, if we look at this a little bit closer, you can see how well VWAP was respected in terms of the upper candle wick on this 30-minute candle here was well respected. And then the bottom of the opening range, we're actually flirting with it at the moment. So you can see we wicked below it, and then we've pulled back up. This is a 30-minute candle though, so let's drop down to the 5-minute in order to be able to see this with a little bit more clarity. Okay. So I've marked up, if you look carefully here, We're still below VWAP, obviously, on the 5 minute. The top line here is the top of the expected move. The next line is the top of the opening range breakout. This line right here is the bottom of the opening range breakout based on the 30-minute candle, and then we did move down here as well. The reason the expected move is marked is because there's a 6 to 8% chance that we stay within that range. This actually could be a trade at the moment. We came back down and retested it. So I'm going to start looking at a potential trade here on the 5 minute chart. We just started this candle though, so it's a little bit suspect, but we did have this retest of the orb. So what I'm looking at here is we had this breakdown on the 5 minute candle, then a retest, and then a potential continuation down here. So this could well be a potential trade for the day. So it's still early, so let's start looking at contracts here for a potential trade. So I'm going to switch to my brokers, so just hang with me here. So obviously looking at puts, I'll be looking at the 676 puts, which are currently kind of expensive at 273. So I'm just going to load those up and see if we can get a trade here. Let's see. I think Thinkorswim's running a bit slow today. If you guys use Thinkorswim, it seems to be having a few issues for me at least. All right, so I've loaded up the 670 puts, 0 DTE obviously, because that's what we're trading. I'm just watching this candle. We're early in this candle, so the fear that we retested and just whipped down to the bottom here and continue up. So got a few minutes here to watch this. I'm going to switch to the 1 minute just to kind of see a little bit more detail how things are looking instead of just looking at the 5 minute candle. So you can see we could have had a scalp a few minutes ago where we scalped like the retest here. Just 2 minutes ago would have been a little scalp 10 or 20% or so. As it is though, in the 1 minute, we're regaining the bottom of the opening range here. So yeah, so we're only looking for a small move, typically about 10% or 20% in a few minutes on these opening range breakouts. At least that's what it is for me. So yes, this is looking promising. Let's see what the next 1 minute candle does, and then maybe we are able to enter trade. If you do enter this, it's obviously at your own risk. Don't risk more than you can afford to lose. And I'll be doing the same. So I'll just be taking a few contracts if I do enter the trade here. While we're waiting for that to work out, let me just remind you that we are live Monday to Thursday, 10 a.m. Eastern time, all this month of March as part of TradeThirsty's March Madness. There's a QR code down the bottom left there if you want to scan that to get the cheat sheet that I just shared earlier in the session. Or you can go to tradethirsty.com/MMM. All right, let's go back to the charts here and see if there's any opportunity. Kind of right at the opening range, bottom of the opening range. It's kind of, you see on this 1 minute candle. It's very difficult to time trade in this session. We've really kind of gone sideways for the last few minutes. Just kind of watching this. So on the 5 minute candle, we still have a couple of minutes left. So it's the 5 minute I usually base this on. So we need to close below the bottom of the opening range on the 5 minute in order for a trade to be triggered here. And it would be a pretty quick trade. Let me just check the opening range here on the 30 minute, make sure we've got it marked up as accurately as possible because we are flirting with it. So I want to make sure that I'm really got that level as close as possible. Make sure that we really are spot on with the bottom of that wick. So about there, close. All right, let's go back to the 1 minute. Okay, so this is definitely a bad sign for potential puts. You can see why you have to be a little careful here, and that's why I wait for the 5 minute candle, because we're going to close, it looks like we're going to close back inside the opening range here. And I don't take a trade if it's inside the opening range. Just because you're likely to go sideways. Today, it was a tight opening range, so 0.4%, and so that's below the 0.7%, which is typical. So the smaller the the opening range, the more likely a trend day is. It's not guaranteed, right? But it's more likely. So this is what kind of happened yesterday, is we saw a potential breakdown, but it didn't hold, and it actually started to reverse and go all the way up, and then we had that really strong bullish day. So that's why you got to be really careful with the opening range. What I often do is add my own indicator to this as well. Let's switch back to the 5 minute, and then I'll add the levels if I have them loaded up today. I think I'm struggling with TradingView a little bit here. There we go. Trying to add my SRX levels. So these are really strong levels of support and resistance. And so this is pretty interesting right here. So the blue acts as a key level. So either support or resistance, depending if you're above or below it. And so you can see, look what happened perfectly down the bottom here. So we started to try to break through the orb, the opening range breakout here. And then we hit this key level right here. This is why I put these on, because it really helps to determine whether we're going to continue down or not. And this actually saved me yesterday as well. So it's pretty powerful. You see, we really hit this S2, it's called, and really started to bounce off of it. We're breaking up through S1 here, still well above the opening range breakout. So my guess here is there's not really going to be a potential trade, that we're going to just kind of sort of be in the middle of the opening range here. You could play calls back here, right, as a rejection off this key support right here. But it's a little tricky at the moment. So yeah, so I'm going to hide these levels again, just because they complicate things a little bit. And you can see that we're back into the opening range. So again, that's why you wait for a close below after the first 30 minutes. So it's definitely a strong reversal here. And we're actually regaining VWAP as well on the 5 minute. So the blue line's VWAP. So we're actually regaining VWAP. So again, it's definitely not looking good for any put trades. So glad I held off there a little bit. Maybe what we see today is a similar pattern from yesterday, where we drew the bottom of the opening range and then just reverse for the rest of the day. Who knows? But at this point, there's no potential trade at the moment here. I'm not confident enough to go bullish, and we're right in the middle of the opening range, which is no man's land, right? So it's not looking great for any potential trade. I'll give it a couple more minutes here, and then I'll let it off. See what happens in the 1 minute. Who knows? Maybe we get an opening range breakout to the upside. It was looking promising back here. It's looking promising. But that S2 line that I put on really showed the problem with a breakout to the downside. And that's the thing with opening range breakouts, is generally you want other confluence, right? It's not as simple as just playing the opening range breakout. You want to add extra technicals on there. Some people would use RSI or MACD or EMA crossings, something like that. I like the key levels the best. They're very well respected. So anyway, at the moment, the market doesn't have, because we're in the middle of the opening range, the market doesn't really have a particular direction that we can really predict at this point. Really waiting for a break above or below the opening range before we can sort of start to say, like, this is looking like a particular market direction. So yeah. Anyway, I think I'm going to call it a day there. We're in no man's land. It's not looking like there'll be a trade anytime soon. So just a final reminder, come and join us Monday to Thursday. Hopefully we'll get some trades. We've only had one trade so far in the session since this started a week or so ago. But you never know. There might be some interesting trades coming up if we get the timing just right. So this is part of the March Madness. It's throughout the entire month of March, and it's run by TradeThirsty. So hopefully it's helpful, guys. Hopefully you got some information from the news at least, and a little bit of information about an orb strategy.